Hello my friends, this is Jorge Gonzalez from Team Data of 8, Realtor with Keller Williams Realty in Miami, Florida. Have you ever thought when you're looking at the news and they talk about interest rates, especially what the Federal Reserve is doing, that famous, the Fed funds rate, and you think, how does that apply to me? And most of the time if you're a homeowner, you're thinking, how does that apply to my home price? Should I stay where I'm living? Should I sell? Should I buy another house? What should I do? We're going to talk about that in this segment. Have you ever listened to the news? You're listening to NPR or watching ABC or CNN or Fox News, and they're talking about statistics, what's happening in the world of business, and they'll talk about the Fed funds rate. You ever heard that? A lot of people don't even realize what the Fed funds rate is, but they think that it has an impact in their life. Why is it always talked about so much? Well, fun fact is that the Fed funds rate is basically an interest rate that banks charge each other when they lend each other money overnight, literally for one night. That's an important rate because that's guided and set by the Federal Reserve Bank. But a lot of people think, oh, the interest rates are going down or they're going up, and the only metric that they know about or they think about when they're listening to the news or watching the news is the Fed funds rate. And they're thinking, well, if that's going down, then my mortgage interest rates might be going down or should be going down. Or if that rate is going up, they're thinking that mortgage rates are going to go up. Well, the truth is that rarely happens. The federal funds rate rarely has a direct impact on mortgage rates. And sometimes they actually go in opposite directions. One of the true rates that you want to follow, if you're interested in knowing what mortgage rates are going to do moving forward and helping you making decisions on whether to buy a property or how it's going to affect your home price when you're trying to sell it, it's the 10-year Treasury note, the T-bill. 10-year T-bill, they also call it. That is an interest rate that's more short-term than a regular Treasury bond, which is a 30-year bond. And it ties almost exactly with mortgage rates. So whatever you see that 10-year Treasury bill, that rate at about a point and a half, sometimes a point and three quarters, and that's more or less where the mortgage rates for a 30-year loan are going to match. So what's interesting about that is when you think interest rates are going to go up, people think that prices of houses might go down. And that's possible. We don't like to hear that interest rates are going up. Unless we have a mortgage rate that's pretty low, then we're happy because we have a better rate than the norm. But when somebody's trying to buy a house, and maybe you're thinking about selling your house and want to buy your house suddenly becomes less affordable to that person. On the other hand, when mortgage rates are going down, people get excited because they think, oh, now I can afford a house, and more buyers rush the market looking for a house to buy, and that demand starts to increase the home prices, as well as the fact that because their mortgage payment would be lower, they can afford a higher priced house. So that also pushes up prices. That's what people get excited about when they see that interest rates are going down. So why does this matter to you? I'm thinking about you as a home seller, maybe thinking in this coming year, should I sell my house or should I stay put? I want to just give a couple of clues. There's a likelihood that interest rates for mortgages creep up because lenders are dying to push the rates up a little bit. Right now they've been kind of flat, and if you have great credit, it can be pretty reasonable right now. But don't pay that much attention to the federal funds rate as an indicator for your mortgage rate. If you really want to see what the market is doing and where it applies to your neighborhood, your house, your street, I think it's a good idea for you to get in touch with me. Let's look at exactly what's happening in your neighborhood, and we'll look at the micro trends in the neighborhood, the lending atmosphere at any given moment, so we can maybe determine your goals for this upcoming year and whether you should sell now or wait till later. So give me a call. My information is below. Give me a call. You can also text my cell phone number. Send me an email and say, hey, George, I want to talk. I'm just curious about what's happening. Give me a call and we can spend some time thinking about these things. For me, it's very interesting. I love talking about it, so it wouldn't be a bother. You wouldn't be taking much of, thinking that you're bothering me. In fact, I think it's going to be a great conversation, and I can help you accomplish your goals. So give me a call, send me a text, send me an email. Talk to you later.